Okay, so I'm going to be working in chapter 5, and um, let me make sure I have the right problem before we get started. I'm going to be working problem number 521 and problem 522 at the end of the chapter. And so I'm going to start with Vulcan Company's contribution format. It's given to us for June, and it tells us that they have, for the month ended June 30th, they have contribution margin of $414,000, net operating income of $36,000. They tell us that management is disappointed and is wondering what can be done. So we've determined the following, and it gives you information in A and B. We're dividing into two sales territories. And it asks us to prepare contribution format segmented income statements for the total company broken down between sales territories. And so I'm going to start out with my, if I can get my computer to wake up. There we go. Sales. I've got my variable expenses. I've got my contribution margin, which is simply my sales minus my variable cost. My traceable fixed expenses, in other words, traceable to the segmentation that I'm working on. My territory segment margin, my common fixed expenses, those that are common to the entire company, and then finally my net operating income. And I should have the same net operating income as was given. We're just simply separating out what we can by territory. So we'll start with the total company first and do a little bit of formatting just to make sure this is easy to read. We're going to also look at percentages, and that will help us analyze our numbers. And so this information was just given to you in the problem. So traceable fixed expenses, if we go up into part number A, it says fixed expenses of $120,000 and $108,000 are traceable to Northern and Southern territories, respectively. The rest of the fixed are common, so we can't separate those. So the traceable would be those two added together, or $228,000, which gives us a territory segment margin of our contribution margin minus our traceable expenses. And let me fix that so it doesn't bother me. And then we have our common fixed expenses, which are simply the rest of our fixed expenses that couldn't be traced to a division, and that gives us the operating income, which was given previously, of $36,000. So we're going to use sales as our percentage that we're looking at, and so we're going to divide all these numbers by the sales expense, and that's going to help us analyze our numbers. Remember, this is managerial accounting, and that's one of the things we do is we analyze. And I'm going to go ahead and carry that over to one decimal place. And then I'm going to start with Northern and Southern. I'm going to separate what I can. And again, do a little bit of formatting. I know most of you are very experienced in Excel and probably know more than I do, but if you don't, I highly recommend you get really good at Excel. Okay, so it tells us that the Northern Territory recorded $300,000 in sales, so we know that. So how do we get our variable expenses? We're going to look up in our problem, and it tells us that variable expenses for the Northern, okay, so just for Northern, and this is where we're going to see a difference in our two companies, our $156,000, which gives us a contribution margin of $144,000. We know that the traceable to this division is $120,000. And so now we know that our segment margin is simply our contribution margin minus our traceable fixed cost. And we're going to also divide each one of these by sales so that we can get a general idea or a good idea of what's going on in each segment by percentage. When you're dealing with dollars and you're analyzing, it's always a good idea to look at percentages rather than total dollars, or as well as total dollars. And then you're given the information for Southern. Let me scoot over. 180 for variable. Our contribution margin is our sales minus our variable cost. Our territory traceable fixed expenses was given to us, $108,000, which gives us a territory segment margin of $162,000. So I think now we see which one of our territories is doing a little bit better. And so again, I'm going to use sales as my baseline in calculating my percentages and get a better idea of what's going on with my company. It asks us also in B, it says the company is the exclusive distributor for two products, packs and tibs. Sales of packs and tibs total $50,000 and $250,000 respectively. In the Northern Territory during June, variable expenses are 22% of the selling price for packs and 58% for tibs. They show that the $30,000 of Northern Territory's fixed expenses are traceable to packs and 40 to tibs, with the remainder common of the two. So now what we're going to do is break this down even further, and I'm going to go ahead and use some of these formulas so that I don't have to repeat all of this. Except now what we're going to do is we're going to break down Northern to packs. We're going to break it down by product. Rather than territory, we're going to break it down by product. Okay, and so let me just go ahead and get rid of all these. I can at least use my percentages. I can also go ahead and copy those formulas down. Oh wait, no I can't because I've got an absolute in there. So anyway, okay, let's go back up here. And so we're going to take Northern, which is given to us. 300,000 is our sales, 156,000 is our variable expenses. Our contribution margin is the difference between the two. Then it tells us, again, on this one, it's different, that traceable fixed expenses are 70,000, which gives us a product. So we need to change this instead of saying territory. Now we're looking at a product. Okay, so we've got our contribution margin minus our traceable fixed expenses. 74,000 is our product line segment margin. We have common fixed expenses of 50,000, and you'll notice that 70 and that 50 equal that 120 that we were using up here. So our net operating income for Northern is still 24,000, just like we had here, but what we've done now is taken that 120 traceable to Northern and we've broken it out between two products. Okay, so packs, we were given the information that 50,000 of sales is packs. Let me go back to my problem, make sure I'm not assuming anything. Sales for tibs was 250,000. Let's see. What else are we given? Variable expenses are 22% of the selling price. So we know that that is point, and I'm doing something I tell my students never do. Don't ever put a hard number in a formula. Putting that 22%, better practice is to put this over in your assumptions and cell reference it. But since I won't be using it again, I'm going to go ahead and do it this way. So I've got a contribution margin of 39,000. They tell me my traceable fixed expenses are 30,000. So I've got a product segment margin of 9,000. Okay, so for tibs, it tells me that my variable cost is 58% of the selling price. And let me show you what I was talking about here. If I put my 22% and my 58% here and cell reference them, that's better practice. You never want to put a hard number in a formula if you can prevent it. And so I've got a contribution margin of 105,000. Traceable fixed expenses were given to me, and that number is 40,000. And so I've got a product segment margin within the territory of $65,000. And again, I'm going to use my sales as my baseline to get my percentage changes so that I can analyze these a little bit better. Carry that to one decimal place. And so now we can take this information and make a managerial decision about these territories and this product. I think that's it for this question. So if you have any problems with that, you can let me know.